Our question of the day, did Christmas come early?
I don't think we're done, but I think the bulk of the rally may have been realized. And, look, we came into November with this really perfect setup where everybody was so bearish, where so many positions were de-risked, where, we thought the Fed was going to be high for longer. And then that entire narrative unwound. And all of a sudden, we're pricing in 100 basis points of rate cuts, and the inflation is slowing down, and the economy is holding up. And that's just a perfect setup for stocks.
It seems to me that before the year end, we're going to give some of this back. So I do agree that, this was a pretty substantial rally. But the next CPI print, I think, is going to be a higher than consensus CPI print. So core CPI could go to 35, 38 basis points because some of the factors that drove CPI lower are actually going to be given back. They're going to drop out. And we see a rise in CPI. And also, I think the consumer is weakening, right? You see that in continuing claims. You see that in the low savings rate. I think the consumer is weakening. So instead of getting better than expected growth and lower than expected inflation, you could see the reverse of that. And a lot of the CTA short covering that has driven some of this rally, we think that is largely done.